Hey YouTube, what's up? It's your boy Shane. Welcome back to the channel, guys, and welcome back everyone. And today, guys, we're going to be talking about long-term. We're going to be talking about long-term investing and how you can structure your portfolio for a good long-term result, and how you can take your time and develop your account over the long term, and diversification and why it is important in the market going forward in the future, in the long term, to develop long term wealth, as which everyone aspire to develop once they enter the market. And remember, guys, time in the market is better than trying to time the market. Okay, so it doesn't matter what level you get into the market, as long as you stay invested over a long period of time, you will definitely be successful if you have the right structures and the right pieces in your portfolio to achieve your goal. All right. So today, guys, in the portfolio, in the basket, what we have 19 stocks, and we have 3 cryptocurrencies, and in those stocks, it is made up of individual stocks and ETFs, and also dividends. There's some dividend ETF, and some dividend stocks, some growth stocks, some value stocks as well. All right, so we're gonna look through and see what we have, and we're gonna go over some of these stocks, and some function that they provide to society, and why I have them in the long term, and why I believe in these companies. As you guys already know about Apple, we don't have to discuss Apple and Tesla and Google and Disney. Okay, so we got Starbucks, we got Amazon, we got McDonald's, Airbnb. So let me start at Airbnb, and let's talk about why we got Airbnb and what Airbnb is all about. Okay, Airbnb engages in the management and operation of an online marketplace. Its marketplace model connects hosts and guests online or through mobile device to book spaces. The company was founded by Brian Chesky, Nathan, and Joseph in 2007. All right. So basically, you guys already know what the Airbnb is, and Airbnb is going to be around for a long time. It is a worldwide service, and yeah, that's all I could tell you. Airbnb is not going anywhere, baby. All right, trust me, guys. I'm telling you. But go and do your own due diligence on Airbnb, and let's look at the performance of Airbnb. Ever since its IPO'd, it is up 113%, and over the past year, it is up. Over the year so far, it is down 26%. Over a 3-month period, it is down 18%. Over a 12-month period, it is down 12%. Over the week, it is down 0.09%. And guys, you should definitely check out Airbnb last earnings report, and you will see why we have Airbnb for the long term, and why we believe in Airbnb as well. So you do your own due diligence. Don't just take what I say, but I'm just laying out some stocks. This is gonna be the YouTube long term stock portfolio, and we're gonna grow this portfolio with no less than 300 a month. So we are gonna go over 300, and we're not gonna go below 300. So we're gonna do that on a consistent basis, on a every month basis, and we're gonna spread that out across these stocks and crypto that we have in this portfolio, and we're gonna grow the long term. And we also have some dividends as well that we're gonna compound to create the snowball effect for this portfolio, and you're gonna see that in front of your eyes, and you're gonna watch it grow. And I hope this inspire you guys to do the same as well, and take your investing serious. It doesn't matter at what stage you start or how much you start with. You just have to be consistent, and pick some good quality stocks that's gonna help you as well, and pick stocks that you know, and that you see, and that you see that's gonna day around in everyday usage of life, and that's gonna help the human society develop in the future. Okay, so after Airbnb, we have Texas Instruments. And Texas Instruments, guys, let's look at the performance over the past 5 years. Texas Instruments is up 111% over a year. Over this year, over a year, it is up one. It is down 1.85%, and a 3 month time frame, it is down 13.40%. Over a month, it is down 1.35%. Over a week, it is down 0.67%. And what is Texas Instruments? It is a incorporated, engage in design, manufacture, test, and sale of analog and embedded semiconductors, which include industrials, automotive, personal electronics, communication equipments, and enterprise systems. It operates through the following segment: analog and embedded processing. So it has two segments in which it operates. It got the analog and the embedded processing sectors. All right. So the analog segment, semiconductor change world signals such as sound, temperature, pressure, or images by conditioning them, amplifying them, and often converting them to a stream of digital data that can be processed by other semiconductors. All right, such as embedded processing. So these two link, both connect with each other. The embedded processing segment is designed to handle specific tasks and can be optimized for various combination of performance, power, and cost, depending on the application. So this company was founded in 1930. So this company has been around for years, decades. All right, guys. And some key statistic for this company, guys: the dividend yield that it provides is 2.55%, and it has a market cap of 153 billion, and the average volume traded is 6.03 million, and the 52-week low for this stock is $202. The 52-week low is $161, and the 52-week high is $202, and it's currently trading for $169. All right, so let's look at this news, the news section, and see what it says. 100 invested in these stocks 10 years ago would be worth. Texas Instrument Incorporated stock has shown weakness lately, but financial prospects look decent. Okay, so this stock is good for the long term, guys. And why we have this stock in our portfolio is because, as you can see, guys, there are chip shortages and semiconductor shortages and supply chain strain disruptions across the globe, and this company is going to be profitable in this sector for the future, and also at the moment, as well as we clearly see what's going on in globally across the world. So now we have GGPI, and GGPI, guys, is a EV play, and it produces, like, I think it was 20k cars and the last earnings report. So you guys would have to go back and look at GGPI. Remember, this is not financial advice, and we're just trying to get through this list of stock real quick for you guys and give a quick breakdown of why we have this. So GGPI, I think it's undervalued, and it is doing better than Rivian and also Lucid when it comes to producing cars and actually getting sales, and it is getting more popular in some markets across the world. So you guys need to go check GGPI out and see why I have it on my list for a long-term EV play. And then we have TD Bank, guys, and TD Bank is, I have it because I need a financial play in my portfolio as well. And over the past 5 years, the performance for TD Bank is up 56.45%. In a 1 year time frame, it is up 18% over the past 3 months. Despite the market turbulence that we have been facing, it is up 3.08%. Over the month, it is down 8.58%. Over the week, it is up 0.8%. Alright, we already know TD Bank already, guys, and it produced a 3.38 dividend yield, and it has a market cap of 139 billion bucks. Alright, guys, so this is just a diversification play in the market, a value play. Provides a good stable dividend, and it gives you growth as well and some safety in the market. So remember, diversification is pretty good for your portfolio, along with dividend reinvesting as well. Reinvested dividends, guys, has made made up 40% of the stock market. Okay, so next in line we have PEY, Invesco High Yield Equity Dividend Achievers ETF. This is an ETF, guys. And if you don't know what an ETF is a fund that tracks different stocks in different sectors across the market. So if you buy a ETF, it's basically you're buying different shares of different companies that are all a part of that fund. So you're buying the whole fund, but with your money is divided in different sectors of that company, basically, of that ETF. So it tracks different companies all combined in the ETF. So if it's 20 companies that they track to put in that ETF, you're getting a part of that 20 companies when you invest with the ETF, basically. So looking at this ETF, the performance over the past 5 years for PEY is up 24.65% for a 5-year period, and over a year it is up 4.49%, and over 3 months it is up 3.72%, and for the month it is down 1.21%. Over the week it is down 1.35%. So a little bit about PEY ETF. PEY tracks a yield weighted index of US companies that have increased their annual dividends for at least 10 consecutive years. Okay, so they track companies that have increased their annual dividend for at least 10 consecutive years. Okay, so the sectors that the ETF is allocated in is utilities, consumer, defense, communication service, industrials, technology, financial service, energy, healthcare, and consumer cyclical. And some statistics for the ETF. It is yielding on a 30-day average of 3.96%, and the AUM, which is the asset under management, is valued at 1.09 billion, and the 52-week low is 19.27 bucks, and the 52-week high is 56 bucks, and it's currently trading for 21.19. Okay, guys, so this is a nice dividend ETF that's going to give you growth and a nice stable dividend, and not a lot of volatility with your portfolio. And the next ETF we have is SPYD, and the performance for SPYD, guys, it is up 20% over the past 5 years, and over the past 1 year it is up 7.81%. Over the past 3 months, it is up 4.75%. Over the past month, it is down 1.43%. Over the past week, it is down 0.74%. So with these ETF, guys, despite what's happening in the market, as you clearly can see, some of these ETF are performing better than what the market is doing. Some sectors are doing good. So a ETF spread their funds across different sectors in the market. So when you purchase the ETF, you will get exposure from different sectors of the market. So you're not going to be allocated in one sector. If that sector is going down, all your money in your portfolio would just be going down in that sector. The ETF give you a diversification into different sectors to help you balance your portfolio and keep your money more protected with the volatility of the market. So what we got next is VTEB ticker, and this represent a bond ETF. And if you guys don't know what a bond is, you have to go look that up yourself and do your own due diligence. But we're going to tell you why we have bonds in our portfolio as well. So the reason why we have some bonds in the portfolio, guys, is to give some protection and some safety for our investment. All right, so bonds are really boring, and nobody really talks about bonds on YouTube, but bonds are for like the old folks and the government. You can see the 10-year note, 20-year note, 30-year note, 10-year note, 5-year note. Bonds are a very critical sector of the market. So when you see people up talking about the 5-year bond, 10-year bond, or whatever, yeah, you should pay attention to that stuff. And our bond ETF is yielding 1.61% on a 30-day yield average. And it is the asset under management is 14.42 billion. So yeah, do your due diligence on bonds and see why you need to have some cash in bonds as safety. And then we have the REIT, which is the real estate ETF, iShares Global REIT. So the reason why you want to have some real estate in your portfolio as well is for diversification. If you don't own real estate physically and you want to be an investor and you're creating your portfolio for the long term, you want to have some real estate as well as a part of your diversification in the market. So if you don't own real estate physically, if you don't own the property or anything like that, you can own the stock real estate. And we own the ETF, the REIT, so we are diversified globally, not just in the United States. We want the whole world's real estate. We want the whole world market, okay? So over the past 5 years, this ETF has produced a 12.84% so far. Over the year, it is up 9.93%. Over a 3-month period, it is down 4.18%. And over a month, it is down 1.45%. Over a week, it is down 0.50%. So about this global REIT, right? The reason why we have it is because it tracks firms that are involved in ownership and operation of real estate across the globe, across the world, so everywhere. So looking at the statistic for the REIT, it is yielding on average a 4.86% for the 30-day yield, and the asset under management is 3.41 billion. Okay, and the 52-week low is $24, and the 52-week high is $30, and it is currently trading for $27.95. So the other ETF we have is iShares Global Clean Energy ETF. So we have some clean energy as well, because energy is a very vital part of human beings' survival on Earth, and human beings' survival to be more clean and more transparent and more fluid in the future of our development with technology and the way of living. So energy is going to be around forever. As long as humans are around, energy is going to be around, okay? So we need energy to survive. So the energy ETF is up over the past 5 years, 141%, and over the past year it is down 16.96%. Over a 3-month time frame, it is up 5.95%. Over the month, it is up 12%. Over the week, it is up 3.61%. And why we have some international global ETF is because we want the whole world as well. We don't want to just to be allocated in the United States. We want some exposure to the world as well. So that's why I put some of those ETFs in the portfolio to be exposed to what the world has to offer, because I think the whole world is going to move in a good direction in those categories that I have those stocks for. And we have TTAI as well, and this is a international quality ETF. Okay, over the past year it has produced a 20 over the past 5 year it has produced a whopping 21% return, and over the past year it is down 5.76%. Over 3 months it is down 15%. Over 1 month it is down 10%. Over the week it is down 0.91%. And what this ETF aims to do is to outperform a broad developed market ex-US quality index. The actively managed fund selects stocks based on free cash flow. Okay? And it is allocated in these sectors: industrials, technology, consumer, defense, communication service, energy, utilities, financial service, consumer, cyclical, basic material, healthcare, and real estate. The top 10 holdings, you can clearly see all the holdings that this fund is allocated. And the statistics: the 30-day yield is 1.63%, which is very sustainable, and it has a average AUM of 71 million. So not that much. That's a small amount. That's like the market cap. That's not a lot of market cap. So we still have that. And this is international as well. So we have that for the international play. All right, the next ETF we have is DGRO, and DGRO iShares Core Dividend Growth ETF. So this ETF is basically dividend growth. So over the past 5 years, it is up 65%. Over the past year, it is up 7.69%. Over a 3-month time frame, it is down 6.03%. Over a month, it is down 5.82%. Over a week, it is down 2.51%. So about this ETF tracks index of US stocks that are selected by dividends, dividend growth, and payout ratio, then weight by dividend dollars. So the number of holdings in this ETF is 423, and you see the sectors which it has aligned itself, and the whole top 10 holdings: Johnson & Johnson, Pfizer, Procter & Gamble, Merck, Cisco, Apple, Microsoft, JP Morgan, Coca-Cola, and Broadcom. And it is producing a 2.02% yield, and the asset under management is 22 billion, and that's looking good right there. So if you want some nice, sweet, juicy dividend and some growth as well, and some sustainability for your investment with low volatility in the market, you can definitely check some of these ETFs out. Okay, guys? And the next one that we have is Harvard MultiFactor Developed Markets ETF. So we have a little bit of, some diversification in those levels as well. So over the past 5 years, it is up 10.49%. Over the past year, it is down 5.62%. Over the past 3 months, it is down 3.78. It is down 7.88%. Over the past month, it is down 6.92%. Over the past week, it is up 0.92%. So about this ETF, it tracks an index that select developed market companies outside the US based on factors like valuation, momentum, and quality. So this ETF track those type of companies that produce what it's looking for. And we clearly see all these companies, and some statistics. It produce a 2.87% dividend, and the asset under management is 1.65 billion. So not too bad, not too shabby. So on the long term, guys, we have our cryptocurrencies right here. We have BTC, we have Ether, and we have Doge. So you definitely need to have some exposure to crypto as well, and have a mixture of ETF dividends, different sectors for different stocks and different reasons to allocate a nice portfolio in the market, which we are doing. Okay, guys? So I hope you guys enjoy this video, and I hope you guys enjoy the information and you find this interested. And remember, guys, long-term longevity in the market, and create a long-term portfolio for your financial wealth, for retirement in the market. So if you're looking for that, guys, and if you want to be invested, and if you want to save some of your wealth for later on, you want to pass it to your kids, or you want to make this be your retirement plan for your income, you can also do it. If you have a whole bunch of money right now, you can do it as well, and you can live passively off your dividends if you keep them reinvested, and you can grow your portfolios, so it could do perfectly well for you in the long term. So smash that like button, and subscribe down, and leave your comment down below. And yeah, guys, I'll check you out in the next one, and have a nice one. Peace.